Hello everyone, this is Peter with Tom and Rita. We're going to look at something slightly different today. Normally we look at stocks, but because the indexes aren't looking particularly bright at the moment, it'd be slightly foolish, I suppose, to be looking for stocks to go long on. So as a change of tack, we're going to look at some currency pairs today. So we've got four to look at. And the first one's in front of you. Just to say that today is Sunday the 23rd of March, and we've got Tom Williams, Rita Offen and Peter Offen. So I'll hand you over now to Tom.
So what's this first one?
This is the Swiss franc and the Japanese yen.
Right, thanks Peter. Yeah, we're certainly looking at something different. I don't normally follow these too much, but I know all the charts, all the markets work the same way. They all work on supply and demand, whether you're looking at stocks, currencies, futures, or whatever. It has to work that way. Now, this is the Swiss franc against the Japanese yen, you said? Correct, right, good show. So, something I've never looked at before. But anyway, if you read the chart, there must have been some selling on that bar, and that bar's looking up bar on a narrow spread, so it's definitely weakness there. They mark it down. There's not a great deal of selling there, but there is a little bit. But it's marked up on this bar, look. There's no effort to go up, look. Volume is quite poor. And then we have what you call here a weak bar. Now the computer's calling that a trap up move. Read these dialog boxes, please. I keep telling you, we hold no secrets back. There are no secrets in the market. It's all there facing you, staring you in the face. And if you hear anybody saying they've got secrets, they know you're being groomed to be conned. There's no such thing. It works on supply and demand, and that's it. So what we know about it, we've tried to put in those dialog boxes. Whenever you see a wide spread down, closing near the low, on increase in volume, not excessive volume, but slight increase in volume, is normally a sign of weakness. And that's, Gavin calls them gotcha bars. And it's about right. It's quite a good description, really. The idea is that if you wanted to go short anywhere near the top there and you hesitated, then these widespread down bars, automatically you think, oh, hell, I missed it. Right, and that's what they want you to do if it's genuine weakness. And of course, if you're long, you're locked in. You then become a weak holder because you're locked in at higher prices, and you're probably thinking to yourself, oh, next time that goes up, I'm out of here. Now, professional money, that's one of the skills they have. They know the reaction of the herd of what's liable to happen with the thinking of most of the traders. Now here we have a red up bar that looks weak. It's got a top tail to it, which isn't very good. Professional money would have seen that, and we know they've seen it because this is an up bar, look. But look at that low volume. There's no demand, and it's come off. That's why we think this market could be weak. Now, however, I'm saying that we do have a sign of strength appear on this last bar. And the reason is the computers put that automatic signal of strength up is, of course, it's down on a narrow spread, closing near the high and the volume's low. In other words, it's reading little or no selling pressure in that market. But you've got weakness in the background. Next one, Pete.
This is the euro versus the pound.
Euro versus the pound. Right, this seems to be a very popular currency situation here. Then we do have a sign of weakness here. That's no demand. However, it's been marked up. There is increase in volume on the downside here, which is not a healthy sign. Right, professional money will be fully aware of that. That's why the next bar's up, closing in the middle, and the volume has slightly fallen off. And also on that bar and that bar. So you've got no demand, and this turns out to be a top reversal. Look, top reversal is the first bar is marked up, closing near the high. The second bar plummets down with a low lower than the low of the previous bar. That's a top reversal, normally a sign of weakness. Professional money would have seen that straight away. That's why this red bar looks weak. It looks weak. Why? Because it's got a top tail to it. Look. So it must have gone up there on no demand. And this looks too like no demand. And even the computer spotted that. We got a dialog box there telling us it's weak, it's no demand. Right, Peter?
This one is the euro and the US dollar.
Right, this one is the euro versus the US dollar. Now looks if we got some selling here. Look, they're up bars, the spread has narrowed, closing in or near the low. Look, professional money saw that, they made an effort to test it. Not a great deal of pressure there, but that marked up. Look at the lowish volume, and look at this bar here. This is weak.
Hidden up thrust.
We've got the computer calls that a hidden up thrust. But it is an upthrust, look, and a sign of weakness. Look at the volume on it. And you've got no demand up bars here. Got a gotcha bar here, it's fallen. And this is, if you could rely on this volume information of the last day, Friday, is showing no demand. That's weakness. And you seem to have weakness in the background. Anyway, I'll say thank you very much.
One more, Tom.
Peter says we got one more.
This is the New Zealand dollar.
Right, we've got one more for you. New Zealand dollar versus the American dollar. Now, the reason why we picked this one out is because obviously this is a very clear top reversal. And that's no demand on the previous bar. There's a yellow box up top to tell us that there's no demand. Professional money would have seen that immediately. So they mark it up. Right, very slight increase in volume. The next bar reverses and closes lower than the low of the previous bar. That's weakness. And this last bar here certainly looks a weak bar if you can rely on that data. It looks like a no demand upthrust to me. But you've got this weakness in the background that will not just disappear. And that looks like an upthrust there too, look. With quite substantial volume. So you've got weakness there, no demand. They've seen all that, so they do a top reversal. This is really like a 2-bar upthrust. Catching stops, misleading as many traders as possible. And that's why it's there. Anyway, I say thank you very, very much for listening to us. And always be wary of this stock market, even currencies, because they're a devious lot, believe me. Don't do anything unless you definitely identify a sign of strength or a sign of weakness. Thank you very, very much.